are always asking for the recording, so I want to make sure we got that done. Let's admit a few more people here. Hi, Jennifer. Okay, so what I'm going to be covering today, this is all practicalities. We're going to have the charts up. It is going to be live. I'm going to be pointing some things out. I'm not going to be calling trades out in terms of saying, get in now or get out now or anything like that. But I am going to show you what I see on the charts. And if you feel that that fits in with your trading plan and your trading style, obviously you're more than welcome to take these trades as we go along. I'm going to share my screen so you can see exactly what we're looking at here. Don't need to always look at my face here for sure. So hopefully you can all see we're in impulse. That's what we trade. As you know, I trade impulse and I teach all my people impulse. I also trade on Dynamic Edge by James Leone. He's one of the Go Live educators as well. But impulse is a very, very simple system. I love it. Basically, if you're looking for buys, you're looking at everything blue. And if you're looking for sells, you're looking at everything red. Okay, so one of the things that I like about it is very, very simple here to be able to follow along. Okay, I do have a little bit of tickle in my throat, so I apologize if I cough a little bit during the presentation, so bear with me on that. The more I talk, the more it kind of tickles my throat and I cough a little bit, so I do apologize if that happens. But I'm not sure why that is, maybe some allergies or something. So anyway, we start off with impulse as usual. This one is called US Tech 100. It's a NAS 100, sometimes called the US 100. Over here on the right-hand side, you can see it says NAS 100. And yet up here it says US_Tech 100. So, excuse me. It does have different names. It's one of the things that I like to trade. I'm mainly trading gold and NAS. I do trade the Dow, the US 30 sometimes as well. So that's another thing that I like to trade over here as well. You can see US 30 and the NAS often move in the same directions, but US 30 can move a little bit differently and can give us indications as to what the NAS is going to do as well. So it's worth keeping an eye on that. But the US 30 does make some big moves, so you do have to be a little bit careful. Make sure you know what you're doing before you trade that. A lot of my friends, good friend of mine, Paul Nagy, loves the US 30, trades that all the time. But he's got bigger cojones than I have, I guess. So anyway, I'm going to teach you a few different things about strategies. One of the things is the pre-trading strategy is no matter what you're starting off, and I'll go over some divergence and I'll go over the Fibonacci as well today. Give you some extra tools. A lot of the stuff on impulse I've already gone over in the earlier recordings. I posted all of those recordings. If you go to my YouTube channel, they're all posted there as well. So you can look at those at your leisure as well. So I'm not going to go through all the basics every single call that we're on. I want to be adding to the calls, especially for people who are on every week with me. So I always like to. I'm a scalper, so I like to scalp and look at the 1 minute and the 5 minutes. Take my entries, but I will look at higher time frames for other things. So higher time frames, I'm looking for support and resistance. I'm looking for trend. I'm looking for certain levels that we need to be aware of. And some of these things will be things like big round numbers. Big round numbers are obviously, 15, 18,500, 18,600, 18,400. They're all what we call big round numbers, and there's always going to be support and resistance around those numbers. So as it approaches that number, more than likely it might break through, it might stop there, and then you'll have a little pullback. So that's if it's going up to that number. If it's coming down to a big round number, you will notice a pullback back up again, and then it will go down and retest that big round number before it breaks through. So when it gets that big round number, make sure you're aware that there could be a support or resistance line there, and you might need to be getting out of that trade and waiting for it to breach that level and then retest that level and then go off in the direction that it's meant to. And the other signals with impulse will give you that idea too. So when we start at the daily, we'll go to the daily here and have a look at this. We can see here that obviously going back from in April around here, we can see that's when it started going up. The crossover on the daily was here actually at the beginning of May, and it's pretty much gone up all the way until we got to the middle of July. Middle of July, then we got some nervousness in the market with interest rates and potential recession, some red folder news and some company earnings, and that drove it all the way down. It came down and hit this trend line here, but again, it tested it here with the big wick, bounced off it, came back and tested here, but we had tweezer bottoms here, so we know that it's going to go back up. It tested this level and off it went again. You can see in these levels to see what kind of money you can make on these. This is the daily. So in the daily on this chart here, from here to here, there was nearly 800 pips just in one day of trading. So now you're not going to be trading all day, but a lot of that movement might probably came in the morning when New York and England overlapped, London overlapped. Okay. And then after that, we had another big move down here on September 3rd. Crossover of the blue here, we crossed down into the gray area. So all the indicators that we use on any time frame apply to any time frame, so it doesn't matter. So when you look at these, we're still looking exactly the same thing. The trend line here is one. We're looking at candle patterns. This is tweezer bottoms here. We're looking at the red candles for a sell. We're looking at blue candles for a buy. We're looking at the crossover here of blue above red for buys, crossover of blue down below red for a sell. If it's in the upper gray Bollinger Band, we're looking for buys. If it's in this lower gray Bollinger Band, we're looking for sells. Okay, so lots of indicators there to show you, works on any time frame. Same thing on the stochastic here. When it crosses up above the blue, we're looking for buys. When it crosses down below the red, we're looking for sells. Okay, so they're giving us heads up very often. And obviously on the RSI at the bottom here, when the black line is in the blue or above, we're looking for buys. When it crosses down into the red or below, we're looking for sells. So no changes there on any other time frame. We're using exactly the same thing. And again, on that September 3rd that I just mentioned, during that one day, hold on, let me just admit some people here. Let's get them in. So on that one day, we did have a hold on, I didn't do right. That didn't quite go in. Let's do it again here. Goes from here to here. It's over 700. So over 700 on that day, over 800 on this candle here. So a lot of pips in one day on the NAS. It does move very, very quickly, and you can get a lot of pips and a lot of money doing these. So what we're looking for here on these higher charts is we're looking if there's any structure anywhere, if we can see any clear lines here. We can see here that this area along here is pretty strong support and resistance along here. So 17,709. So again, that's going under the 18,000 mark there. That's your big round number to be aware of. Once it broke through 1800 about here, it only touched it once. It's trying to head back down there again. So it would need to come below this trend line to get there. Okay. So then we drop down to and again, we're looking for trends. So you can see, you know, from here onwards, big uptrend, obviously. From here downwards, another big, and that's with trend, because obviously here's your main trend line here. And then here we've got a counter trend all the way down to here. But it was a massive move, and that did go from 11th of July through to about 11th of August. So, you know, nearly a month of a counter trend there. So, you know, counter trends can be very lucrative, but obviously they're more risky. So be careful about those. Here's another great trend here as well, uptrend with trend. And now we're going counter trend again. We did get a crossover a couple of days ago. So we do that when we're looking at all these charts. We're looking at these things to see where their support and resistance are, where the areas are going to bounce off, where they're going to bounce through. We drop down to the 4 hours. This is just giving us a big overview of what's going on. Again, we can see quite a big area of resistance up there. So, you know, again, 1987, you know, we're a long way away from that, but that could be drawing us up there. Go down to the 1 hour. Now we see on the 1 hour that we're on a counter trend. And when you look over the alert panel, this would give you a heads up of what is trending. So we're only in an uptrend on the 1 minute and the daily. Everything else is on a downtrend. So the continuation of this is we got to be careful, especially if we're trading the 1 minute, that we're not going to go back down and follow the trend down. That's the trend from the 5 minute to the 4 hour. Okay. When we go down, I'll skip the 30. We'll go down to the 15 minute. We know that's a downtrend. Here it is. Again, it tried to break through the trend line up here. Couldn't. It got nowhere near it. Getting away from it, tried to break through again, and it broke away. We see a clear area here where the blue dropped through the red, and then we just went down. This happened on Friday, and we went all the way down to here on Friday. And this is where we opened, 3 o'clock Pacific. Don't forget you can change your time frame down here. I'm on Pacific Standard Time. Okay. So at 3 o'clock on Sunday, you can start trading most instruments. It's usually going to be quiet for the first hour or so, but you can see here around 5:30, we start seeing a clear trend going up. Around here where the crossover is, a clear trend going up, even though it's counter trend. We might be looking, the 1 minute is up. This is a 15 minute. So we might start seeing some upward pressure here. We go to the 5 minute, same thing, nice crossover right here, heading up. And look how close we're getting to this line. So it looks like on the surface of this that we're actually going to have a crossover here. Let's put our macro trend line on, is right here. That will shift to over here. If this carries on and meets and breaks the trend line, we'll get another macro trend arrow showing that we're going up. But these, you can see these candles are not very big. Let me just take the arrows off. You can see these candles are pretty small. So you've got a chance to make small money, but fairly regular. There's no big moves that are going to catch you out on a Sunday. Typically till a bit later when London opens. So when you get around 10 p.m. or 11 p.m., you're going to start seeing this move. I showed you this before. This is a Forex market time converter. It'll show you right now it's 7:18 my time. You can set your time right here. I've given you the link to this before. Right now we're in the middle of Sydney and Tokyo. We're in the Asian range, and we won't see London session open. London will open. You can drag this as well. So if you want to see London opens at 12, but you get pre-market trading, obviously, on all these markets. So around 10 or 11 p.m., you can start trading those. Okay. So let's jump down to the 1 minute. And we can see we did jump here. We got a blue crossing the red right here. So we have, again, we have one signal here. We have Bollinger Bands didn't start expanding until here. I guess Jennifer's having trouble getting in. And you can see the Bollinger Bands just start expanding here. So that's another thing we look at. We're looking at the candles getting into that gray upper Bollinger Band zone. So we look at that. So we got a crossover there. Let's put the candles back on so we can see. Yeah, see all these red arrows over here. All these red arrows here, here, and here. And then we start getting the blue arrows down here. So that's another sign that we're going up. We didn't quite break the blue, but we did start shooting up here. So there's another sign there. And obviously we dropped down in the red for a little bit here, came up to the blue, came down, tried to get into the red, and now we're bouncing up. So again, we've been in blue all the way along there. So that was your entry. Okay, so we had 1 sign, 2, 3, 4, 5, 6, 7 indicators to tell us to get in. And we got that with a heads up really from about 450. I would say this one here, 453 was our real. This one here with the blue arrow going up, that was really our entry. We saw it break up through here, gives us a little head up, breaks up through here, and off we go. And here is when we start seeing the volume kick in. With the Bollinger Bands expanding. So if you didn't get in anywhere along here, then definitely when you went up on this arrow here, or maybe this candle here probably was the one to get in on. But definitely by this time you would get in and take that up. Got a little bit of pullback, but it didn't break below the red, so it stays up in that green. A little bit of pullback. I would be out here because we crossed into the white area, which we don't like to be. We did cross down through the red. We did through the red line here on the stochastic. We did drop through the red on the RSI. So again, all very, very standard stuff. I repeat it because the more you hear it, the more it'll sink in. That's how I learned. I just kept listening to the same stuff over and over again till it became second nature. Now, divergence. Does anyone know about divergence? Does anyone know how to calculate divergence on impulse? And does anyone know what it means? Let me tell you. So divergence, how you measure it on impulse is you're looking at the angle of the trend line on the RSI versus the angle of your candles up on the main chart. And when they're going in the same direction, we can anticipate that the trend is going to be in the same direction. When they're in opposite directions, we should be looking for a pullback. And I'll show you an example here. This is on the 1 minute. We can see down here, we've got an angle. If we draw that from there to there, we can see the angle is down on that RSI. From the top of that line to the top of that line, you can see nothing breaks it. It's going down, okay? Now what we have to do, if you see the dotted lines, we've got to draw the trend line exactly the same place above. So again, we draw our trend line. we take it over here. We're going to go from this candle here, and we're going to take it to that candle there. Okay, and you can clearly see this top line here is angled up, and this bottom line here is angled down. Okay, that is what we call divergence. The reason it's important is because even when we're on an uptrend, as we can see by this main trend line, and we're an uptrend here because the blue is above the red, that's a secondary trend line, that would indicate we're looking for buys. But the divergence is giving you advance warning that we may be suffering a pullback. Now, how important is that? If you're in buys up here thinking, hey, we're in buy mode, we're in blue here, everything looks hunky-dory, we're going up, and then all of a sudden you pull back down to here. And you say, oh, well, I wasn't expecting that. Well, actually, divergence is exactly that. It's one of the few indicators that is what we call a leading indicator as opposed to a lagging indicator. A lagging indicator will tell you stuff as it's happening or after it's happening. A leading indicator will be telling you what's going to happen. And obviously, if you know what's going to happen, you can be ready for it happening. And when it happens, you can get out if you haven't got out already. Now, you can see here, when we hit this line here, and we hit this line here, it pretty much retraced immediately. That doesn't always happen. And if I can show you, let's go back to, let's say here, and let's go back here. Okay, we've got divergence here. We've got this on the downslope, and we've got this on the upslope. Well, what happens? We had that little pullback. Okay, so it's telling you we've got a pullback coming. Sometimes it happens very quickly, sometimes it doesn't. So it doesn't matter what time frames you're looking at, the time frame has to match from top to bottom here, and you can't force it. It has to go from the top of this line to the top of another line without being broken, and it goes from the top of that to the top of that without being broken. And so now we're anticipating a pullback. We can see this pullback here. If you're in this trade, actually, you probably should have been in this trade, let's say when it broke into there, after it crossed the blue here, broke into there, and you would have got out here. You could have got out on any of these pullbacks. And it was all forecast by divergence. There, and here. Okay? So the divergence gives you a heads up of where it's going to go. You can get out. The beauty of that is you're going to take maximum amount of pips, and then you're getting out and you're waiting for it to set up on trend again, which it does here when it breaks through the blue here. We got to wait for it to break the blue cross the red here, and we're looking for an uptrend here, continuation. We're actually in a bit of consolidation here. So again, as everybody should know, when after a big move up on any time frame, you are then going to get consolidation. Consolidation means we're going sideways. You can see right here, we're kind of going sideways. We've got to wait for that to break out. So now we're waiting to see what's going to happen here. Are we going to break up through the, are we going to break up out of this area and head up here? Or are we going to break down and head down again? My thought is we're going to be heading up here, even though it's only the 1 minute that's showing an uptrend. I think if it breaks through the top of this line here, we should be good. We are right now, you know, again, looking at a big round number. Here's 500 right here. So again, when we're looking at here, we do have a big round number right here. So if it comes down and hits this, is it going to bounce off this and go up? Is it going to bounce off this, come up and retest it and then come down? So the 500 is very, very important. It's again that big round number. Okay. let's get rid of all that. Let's go over Fibonacci here quickly so that I can show you that. Hopefully everyone's watching and learning this, writing this down. It will be recorded, so you can go over this at a later stage. And I'll take questions afterwards as well. I'll take the the arrows off the candle so I can show Fibonacci. This is the Fibonacci tool right here. Sorry, right here. It's called the Fib retracement tool. Now on impulse, it's a very, very pared back Fibonacci tool. Okay, it only shows a couple of levels, which are the strongest levels, but nonetheless, you've got to realize this is not a full Fibonacci tool on impulse, but it's how they use it on this strategy, and it works very well. So what we do, if you're trading the 1 minute, there's a couple of ways to do this, and you always want to follow your main educator or coach or go live educator when they teach you how to do this. But when I'm scalping, I run it on what we call run of color, and I'll show you what that means. So I'll activate my Fib retracement tool. Run of color means all candles of the same color and has to be a series of at least 3 candles of the same color. So in this case, I'm going to use this one here, which is 1, 2, 3, 4, 5, 6, 7 candles. So we only need 3, but in this case, it's 7. There's another one here, 1, 2, 3. We could have used that one. Another one here, 1, 2, 3. We could have used that one. Okay. This one here is only 2, so we can't use that one. This one here is 1, 2, 3, 4, 5, 6. We could have used that one. Okay, but I'm going to use this one. And what we do is we start from the first run of color, which is the first blue candle. We click on the bottom of the candle or the wick, whatever's the lowest point, and we take it to the top of where the next candle is. In this case, that red candle there, okay, is where I would click it. Okay, so from the bottom of the blue candle to the top of the red candle, and you've got to include the wicks. I'm going to stretch it sideways a little bit so you can see what the numbers are a little bit clearly. So their numbers are the 50 and the 618. These are very, very strong Fibonacci levels. If it doesn't break the 50 or it bounces off the 50, we're going to have a continuation. It can actually come down as low as the 618 and bounce, and you'll have a continuation. However, when it drops below the 50, just be careful that it may drop again below the 618. So you've got to have FOB, finger on button. So in this case, it came down, didn't quite hit the 50, and it went back up. So if you were in a buy, you could stay in it, and it carried on up. Okay, so let's get rid of that one. Let's find one that that failed. Well, here's one that failed right here. We go for run of color again. We got 4, 1, 2, 3, 4 candles. We start at the bottom of the wick of the same color candle, and we go until we get the top of the red candle right there. I'm going to go a little bit to the left again so you can see these numbers. Let's take it right across here so you can really get a clear idea of what happened. And you can see we went up and up and up. We broke the 50. So where we know that this may go back down again, we can see we're in the white area anyway, so we don't like being there. Even though this comes up through the blue, it actually dropped through the blue here, which we don't like. It dropped through the red here. So actually, even before it hit the Fibonacci level of 50, you probably would have been out on this candle here, or definitely this candle here. If you waited to that candle here when it dropped below the red, okay, you wouldn't have got the bit. You probably would have just broken even roughly. But the key is you wouldn't have lost any money on that. Okay, so that's how the Fib works. Let's do another one here. I'm just picking these by random, guys. I haven't looked at this chart before. Here's another run of color. 1, 2, 3, 4, 5, 6. So we start at the bottom of this blue one. We go to the top of that red one there, and we'll slide it across so you can see the numbers. And we can see here, we did break the 50, but we did not break the 618. How perfect is that? So you're in a buy here, you're looking at that, you see a red candle. It doesn't hurt if you get out, like right here when we cross the blue line on this candle and we're in the white area. That is definitely an exit strategy to do that. But the fib will show you that it is just testing this level and off it goes. And if you did stay in, it would take you up here to here. You would have got a lot more pips out of that. Okay, so that's the lesson for today. Hope you got some value over that. We didn't really see any setups here when we first started on that. Let's just have a look. Actually, let's just have a look at some other stuff, see if there's any good trades setting up. That's oil. That's gold. Gold has just gone into buy mode here on the 1 minute, although on the 5 minute, 15 minute, it is in sell mode. We did get a crossover here. Going down, we are in the red down here. We did drop through the red down here. But this is counter trend. Again, I wouldn't have taken any of this. I would have taken a buy probably here. Got out here. Got out on this candle. I wouldn't have been in any of this. I would have gotten another buy here. You can see we're crossing over. Didn't give up many pips and then retraced anyway, would have got out. This is what we call an engulfing candle, which is one candle is bigger than that candle. So that's an exit strategy, is an engulfing candle. So would have got in there and would have got out right there. Your other entry is definitely right about here. That's a bit of an early entry, probably better. Well, you could have gotten on this candle or this candle here. It did retrace a little bit. And then the continuation was here up to here on gold. After that, it dropped through the red here. On this candle, you would have got out there where it wicked down into the white, or definitely out on this candle. And then after that, it's shooting down into sell territory. You could have taken a sell here if you like. It is a counter trend. It's not that very strong. You probably just would have broken even on that, which is okay. As you know, we have 4 things that we're looking for when we take a trade: a small loss, a break even, a small win, or a big win. So when you take your losses, which we all do, just make sure they're small ones. Okay. And again, yeah, this again, I'd be looking if this starts shooting up here and breaking up through this level, we could start seeing some buy opportunities. This has to come down here and then shoot back up through the blue for a buy opportunity. And this obviously has to go up into the blue for a buy opportunity. So again, we know what we're looking for. We can just sit and wait for the chart. We're waiting for this blue line to cross up into the red line. We're waiting for the Bollinger Bands to expand. We're waiting for these candles to get out the white zone and hit this upper gray Bollinger Band if we're looking for buys. Now, if it turns the other way around and starts heading down, this starts doing this instead. This starts heading down again. Obviously, we'll be looking for the blue to turn away from the red and for the candle action to start going down here in the gray Bollinger Band area. Okay, so that's how we look for setups. I'm going to stop sharing my screen now so that we can I can look at the chat and see if there is anything else going on. Let's see, chats. I have an issue with letting the market breathe. This is Brandon. I have an issue with letting the market breathe and end up losing more than I would have. Oftentimes it stops me out and then shoots up to TP. Okay, that's a great question. I'm going to stop the recording now, just so that we can keep that short for the stop recording.